Matt McDonald, MattMcDonald.
All right. And also, what's a good title for you?
Financial planner.
Financial planner. All right. So first of all, just go over kind of what you do day to day advising people, just as an overview.
Yeah, so my position is to work with family members in helping them create a written and documented financial plan to help them navigate all the unexpecteds like we're going through now, to help them understand how to budget, how to manage their cash flow, how to mitigate taxes, make sure that their estate plan is done properly, and then also to help them invest in a relatively uncertain world of the stock market.
So kind of those long-term goals is kind of mostly what you focus on, or is it also short-term?
It can be both. I think every family, no matter how old you are, whether you're 20 or 70, everybody is going to have some long-term visions of what they want, but part of living life is to experience it. And part of that means we need to be doing things today to enjoy the journey along the way. It's always fun to talk about retirement, but once you're there, that's the destination. So it's about figuring out ways to ensure that the journey along the way is done financially planned correctly so you can experience those things. And that's a big part of my job, is making sure you live today while still planning for the future.
Very good. And what have people been telling you recently that they're most concerned about? I'm sure it varies from person to person. But
yeah, I think especially in current day, I think it really comes down to just a lot of emotions that people have. I think especially when you see a world that is a little bit more divided politically, I think that you start to see bigger emotions for people on both sides. And so a lot of what I have to do is refocus on what's important and what's controllable and help them navigate their emotions around things that are real. We have to acknowledge and represent how they feel, but we have to also still focus on the things that we can control. And so a lot of that I do with people is helping them focus on, are we budgeting? Are we handling things properly? Are we building towards what it is you want to do in the future? And I think that's a big part of the job.
Looking at a slightly bigger picture now, do you see difficulties ahead for the next few months? I know obviously people are already starting to talk about recessions, fears like that.
Yeah, I think if you look at the current broad-based market, we're going to see some rough numbers coming up soon. We're going to see a relatively potential negative GDP, which is a little bit of a fraudulent number because in the first quarter we had a lot of businesses doing a lot more purchasing than they normally do for fears of upcoming tariffs. So that's going to create kind of an artificially low GDP in the first quarter, which also means we're going to probably see an artificially high GDP in the second quarter because all that production is going to catch up in that second quarter. So I think the other thing we have to kind of be aware of is we're probably going to see a bad jobs claim here at the beginning of April because of the federal cuts that we have seen. So that's going to create some short-term hiccups. But if we look at the broad base, looking through the telescope instead of the microscope, that's where we do see corporate earnings are projected to be double-digit positive. So if we can kind of navigate the short terms with a lot of emotions, a lot of big, scary headlines, and refocus on the individual and what their needs are, for the stock market itself, there's still reason to be optimistic. There's still reason to see things on sale right now. Some of your biggest companies have seen a lot of value shed. And in my world, the question is, do we think a company like Microsoft is going to go away? Or are they going to continue to become a bigger part of our life? And I think we all kind of know the answer to that. So, why would you not take advantage of a 25-30% sale?
Right.
So I'm going to kind of drill down on that just a little bit more. I saw that it was either yesterday or the day before, something like 60% of all trades were 401k. Say I'm a person sitting here panicking. I'm like, oh my God, we're going to do a recession. I got to protect my money. What are you going to say to that person that's trying to look long term and maybe parking their money with Microsoft or something?
Yeah, so the hard part to answer your question is unless you work for Microsoft, you can't put it in Microsoft in your 401k, so you are limited with your options. But what I would tell people is, what's your plan? What's your goal? How much longer do you have? And remember that every month that you make your contributions, no matter what the market's doing, whether it's going up or going down, you're buying. So every month that it keeps dropping, you're buying things cheaper and cheaper and cheaper. So for those who are working, if we can shift our mindset away from the fear of things and really tilt it to the opportunities that exist, which is these great companies that will be here probably the rest of my life are constantly going cheaper and cheaper every month, but I'm buying them every month. What a great opportunity when you look back 5, 10 years down the road and say, man, I wish that would have almost lasted longer because I could have bought more at that cheaper rate.
So maybe now's the time for individual investors to maybe put their foot on the pedal, move that 401k contribution from that 3% to the 5% or whatever.
I think whenever you have market downturns, if it's affordable within your budget, because again, it always goes back to monthly cash flow. We can talk long term all day long, but if you can't afford groceries today, it's a null point. But for those who have the ability, then every time the market downturns, if you can increase your contributions at work, you are doing yourself and the future version of you the greatest justice that you could.
Very good. So you wouldn't recommend making any rash decisions right now based on downturn?
Yeah, I think it just kind of depends on, again, every individual and what your tolerance for risk is. For those who are big risk takers, I think you're not going to fear these kind of downturns. Those who are more conservative with investing, who might be a little more concerned about the current day, it is fight or flight, basic human instinct. When it comes to money, it's always flight. And so that instinct is run away, run away, run away. And people like myself, what we have to be is, in those 80s movies where it was always the guy hitting the red button and the nuclear bombs go off, my job is always to be the glass case over that and remind them, don't focus on today, what are our long-term goals? And making these moves, are they going to help us or hurt us? And most of the time, if you look at the last 125 years of data, we would say when you sell at lows, you've hurt yourself. So we can't predict the future. The one thing we can predict is we can't predict. And so because of that, we always have to go back to what's important to you, what are your needs, where are you trying to go, what are you trying to achieve, and building around that with how we invest.
Okay. I know a lot of people are worried about retirement funds and stuff. Do you see that in any immediate danger?
So, as I always say, the one thing we can predict is we can't predict. And I think that when, again, we look at the overall health of a market of stocks, we have to say, are people still buying Coca-Cola? Are people still buying diapers for their kids? Are they still buying batteries? Even when things get really bad, are people still buying, stuff to shave their faces? I may not be, but other people are. And as long as people are making things and buying things, our economy will continue to push itself forward. The fear is when people stop making stuff. The fear is when people stop buying the things that are being made. That's when you get into some fear. But in the last 125 years, we've never seen that.
What about inflation? I know, is that cooling off at all? That seems like it's just been up and up for the last few years.
Yeah, so inflation has been coming down. We did see a little bit of a level off. We have seen a little bit of a trend up since November. The last several months, we just had data come out today that actually showed better inflation than we expected. And that creates a lot of the turmoil because when we have a market like we have now, we have a very expensive stock market. When we changed presidents back in January, the valuation of the market to correlate to human body the market was running about 102 degree temperature. It was very hot. And so when you have a hot market, headlines are always going to drive movement more than anything else. And obviously, as we can all agree, there's been a lot of headlines in the last few months. And so when it all comes down to how we analyze things, the market's expensive, and when it's expensive, we expect corrections to bring it back to a fair value. That's what we've seen. With inflation, we have seen a little bit of a trend flat. Since November, it's upticked a little bit. But as of today, we did get some really positive data. With tariffs, which are obviously the core word that everybody's bringing up, that has the potential in the short term to push inflation a little bit higher. But overall, what I would say to people is it where we were 2 years ago, 3 years ago? No, it's substantially less. So we have overall seen a good trend downwards.
Oh, that's good. That's good to hear. I know it's hard to boil it down to everybody in every situation. What are a few good things that people can do who are worried right now?
Yeah, I think when you look at financial planning, you have to control what you can control. And it starts with the basics. What's your budget look like? Are you managing your cash flow? Are you able to do the things you want to do today while still planning for the future? We can never predict what's unpredictable, but what we can control is what's controllable. So we have to focus on what our day-to-day decisions are, what our goals are, and then we use the stock market as a solution to whatever those problems show them to be. So stocks are just a cool way to make sure that we are building our money in a way so that way we can do the things that are really important in our lives. And if people stop letting the outside world interfere with the focus of where they're going, they would probably live a lot more comfortable lifestyle, psychologically at least. And that's my goal here, is to make sure that we stay focused on what we can control.
Great. I think that's some good advice to end on. So
Perfect.